How are you? How are you today? Hi, Donnie, and welcome back. How are you all, really? My pleasure to be here with you again on Street.com team. We are going to record today's webinar, so let's see if everything's going fine. Okay, seems so. We have no problems with the recording, no problems with anything. So let's get started, right? I have placed the chart in there just as the background while we talk a few small things before start. Okay. One of it is we are going to the idea today or the idea of the webinar is to understand how the commodity channel index works, why, and how to read it. Okay. And if we have time, a couple of combinations with another indicator to see if we can have profitable signals coming from this particular one. Okay, as you all may know, using just one indicator to get in and outside market, getting entry signals with stops and limits and such, is not the most recommended thing. Okay, we need at least two, one to give us a signal, the other to act as a filter. It depends on us. It's our own choice to see which one is more accurate or fits better our trading style or strategy, okay, and decide whatever. If we are going to use this one as a signal provider or filter another one, okay, I will show you how do I use it, okay, but that's not meaning that's the only way to use it, right? Indicators are there to provide information, right? We need to know what information they provide and how, and then decide how to use that information. As I always told you, keep in mind that the strategies I use or share with you in these webinars are usually based in an UK MetaTrader time zone. That could be, the results could be a little different if we are using, I don't know, American time zone MetaTrader or any other time zone time frame, okay? Candles don't close forward, candles don't close at the same time, for example, daily ones also. So there are different levels and different times that things take place, and so indicators give different readings, okay? Keep that in mind. And as I always told you, backtest your strategies or backtest any strategy you learn here or there, no matter who teaches it, backtest it in your own platform, deciding go and live with such strategy, okay? Anyway, the idea of talking a bit about commodity channel index or this indicator created by Donald Lambert is that the idea is that this indicator will help us identify the really important cycles the market has, okay? But based in the theory of market moves in cycles, okay? Lambert says that price moves and in between maximum and minimum separate by period intervals, okay? Despite we all tend to use the commodity channel index as per 14 periods, the default settings we saw in almost any platform, the fact is that he recommends to use 1/3 of a complete cycle in order to take a time frame in commodity channel index. So if we are talking about the 60-day cycle, okay, a minimum point each 60 days or candles or sessions, right? A 20 sessions commodity channel index is recommended, okay? But the idea is that we don't know if the cycle lasts 60 days, 28, 1, or maybe 120, okay? So that's something quite relative. We have to learn to separate the cold theory of indicators or statistics or mathematics with the practical views, okay? Keep in mind that not only for this one, for all indicators, okay? In this particular case, if we talk about the 14 sessions commodity index, it will take a cycle of 42 days, meaning a month and a half around that. So it's pretty accurate, okay? It's taking me the cycle of the last 1.5 months. Pretty interesting. Anyway, the idea of this indicator is that it measures price changes of a pair okay, against the statistical average. The high price shows that it's too high versus uh, its average price. Why? Lower readings indicators is showing us the price is a bit too under its average price. Okay, of course, the average of those sessions we set in the indicator. Okay, we have questions. Hello and thank you. I'm fine, really. Donnie, we are going to come to. I'm reading questions. Sorry, I will turn the camera off in seconds. You don't see this. Good to see you all, really. Yes, Donnie, we can use divergences with later and followers is a road. We are going to talk about that. And Jack, the default is 14, okay? But I will show you how I use it. You will find out in some cases I rather add a couple of days or maybe 17 is in particular the number I use for myself, okay? But anyway, let's go with the basics and we will continue moving on with all your questions, Donnie, okay? Most of them will be solved in a few minutes, okay? If you see, I choose pound dollar because I rather believe that this one works better with pound than in air, for example, with euro, okay? I have better results using commodity channel indexes with pound than with euro dollar or another product. I rather use it for all pound crosses. In particular, me as a filter, not always a sign provider, but that's something about pound. Okay, the idea of this indicator is that once it's reached the, sorry, I have marked the indicator also comes by default with the 0 level, 100 and less 100 level, right? And you may have noticed that I got a 200 and less 200 level, right? I have added extra levels to the common ones that came with the indicator. Okay. The idea is that readings above 100 are showing me that the pair is overbought, okay, and readings under less 100, okay, are showing me the pair is oversold. Yet, being oversold or overbought, no matter which indicator we use, it's not a reversal signal, right? In this particular case, this particular indicator is good because it's telling you that once it breaks the 100 or less 100 level, like you did in this particular case, with this strong uh, vertical acceleration, right? It's telling you that despite a result, okay, despite entering in a result territory, the pair is set to continue to the downside, okay? It's offering you a signal of continuation. So, if what any case you were selling before the pair opened this candle, okay, this one, that cut indicator, that shows the indicator cutting, sorry, the white vertical 100 level to down. It's not telling me that the pair is ready to return to the other side, okay? On the contrary, it's telling me that it's a good chance that bearish previous trend will continue, right? How far? Well, the sales indicator provides that kind of information, okay? If you see this case, for example, okay, we have a cat of a less 100 level and an acceleration, yet with next candle, okay, the indicator bends back to the upside. It starts to bend. We have not a continuation. So this case in particular is telling me, okay, this is your time to take your profits. Okay. Anyway, we went a bit too ahead, okay, of what I was trying to say. The general idea of this one in particular, how we read the signals, okay, is the crossing of the zero line in the middle, okay, this one. It's supposed to be a support or resistance, mathematical level, okay, and limit of in between being bearish or bullish the pair, okay? If we are above the zero line, then we assume that the pair is an upside trend, and if we are under the zero line, we assume that the pair is a bearish trend, okay? Regarding the different pairs, we can take a look at. That's why I have the 200 level. It's because when we reach the 200 area, then yes, we are at extreme of the fault over both readings, and yes, that's the moment when the pair could start bending. Okay, could turn the trend, change the trend. Sorry. When it comes to Japanese Gen crosses, instead of 200, I rather use 160. It's not necessary to see the pair reaching 200. Around 160, it could also be a good level. What you can do instead of placing a fixed 200, a fixed 160 or whatever, is make your charts really, really small, okay? And try to draw support and resistance levels by hand, okay? Like, I don't know, maybe around here, sorry, a bit lower. Oops, it's the same color, sorry for that. Around that level, okay, 165, we have several houses around the area. Just an example, okay, not meaning that 165 is an important one, right? But you can check past history of the indicator and see if there is a level where the pair tends to hide, okay? As more times the pair tends to hide there, more interesting will be the level to set it at fixed to trade. I don't recommend anyway to place uh, multi-levels, okay? I usually even erase the 100 one. You do not have to fulfill your chart with levels. That will be confusing, right? The best idea is to reduce your charts, look at past, and set your levels by hand. Once you have found them, set them, fix them. Keep in mind that 4 hours, 1 hour, and 30 minutes will show each time frame different readings. And if we have different readings, then we will have to use different levels, or at least checks and approximation. That's why I finally come with the 200 per pound, okay? Because it's an average and probably interesting area for almost any time frame for intraday or short-term trading, okay? Anyway, I keep on talking. Okay, Nick, do you use mainly forward charts? Yes, I use mostly these 4 hours and 1 hour charts. I usually gave in the webinar examples with the 4 hour charts because they are more easy reading to see many times, okay? But I do apply it also to 1 hour charts, and we are going to see some examples, right? Anyway, as I was telling you, the idea is that you have a selling signal when the indicator coming from near or above 100 level, okay, cross the zero line, right? That is an accurate selling signal, okay? The selling signal will get exhausted once the pair bounce back in 100 or the less 200 level. Let's see which one. Or even if it bends before it, right? That's the selling signal. The buying signal, on the contrary, comes when the indicator coming from levels at least 100 or less cuts again the horizontal way this zero line, okay, giving an entry with candle opening, an entry signal, okay. Keep in mind that if you have a buying signal, let's see this one, okay, and the indicator continues rising straight above the 100, right? Like it did in this particular case, okay, then your signal remains valid. So if you enter wrong here, pair continues rising after the signal is over, and so the indicator your signal is still valid. Once it forms a small B or indicator starts bending, that usually happens way fast after the candle opening, then it's time to close your trade, and take your profits out of the tail, okay? Anyway, I guess that's quite simple. It has not much, much hidden science in the middle, right? But when it comes to determining the probable reverse selling trend, right? When the pair will probably revert its bullish momentum or its bearish momentum, you have to take a look at the shape, okay, of the indicator when it bends and re-enters from outside 200 or less 200. It re-enters in between the less 200, 200 areas. Okay? When in this particular case that we are way above the 200, right? So that should be signaling a probably downside corrective movement. You can see that the pair managed to continue rising another 120 pips before bending. Okay, before telling me there is a chance of a downside corrective move. In this particular case, you will notice that it's like a square right here. We have not a good signal of coming back to the downside, right? We have good signals of approval of downside corrective movement if the shape of this square I'm saying here is more like a B or an inverted B, like in this one, okay? That's the shape it has to have to signal a probable downside continuation. And in fact, in this one, it did, right? Okay, it opened the candle. When this candle opened, indicator crosses the back at less 200 level, okay? Back against the area, the cycle area, okay, giving me a selling signal. I could use it, I could not. I should filter it with something else. But anyway, it did, okay, but the shape was much more accurate than this one. If we take a look at this one, in fact, the pair retreats a bit, it continues to the upside. And in this particular case, the pair slumps in one candle 150 pips. That's something that you have to pay extra attention to. Okay, the B shape. See, in this particular case, the perfect shape of bottom, just in an upside corrective movement that actually took place, and it cut straight the less 200 and the 0 level. Once the indicator reached this area and the price action reached this high, okay, indicator start bending to downside, and in that case, I should take my profits and move away. What I don't like particularly, okay, is when signals, buying or selling signals, come from levels very close to the 0 line, okay. I will take my signals when the indicator, as I told you at the first time, comes from at least, let's say, 100 or less 100 level. When the indicators start doing this kind of stuff, okay, hovering around the midline, okay, I try to ignore signals in those particular cases, okay? I try to ignore them. I don't read it. I rather wait till the indicator reaches some extremes and start coming back either way up or down, okay? Ignore the readings. In fact, I do believe that all indicators we use with such midlines, like the 100 level in momentum, so need to be filtered with this exclusion zone, right? We can take trades coming very close from this area. We should ignore that reading, right? I will try to take a look at previous, okay, previous price action, okay, and as you can see, the B shape is always pretty much more interesting in the pair, okay, than when we don't have those such B's, okay. Like in here, we even have a clear B and a following cat, okay, of the less 200. In this one, yes, we do, okay, and the price action is pretty much more interesting. As usual, if you're going to trade this kind of indicator strategy, I would recommend you to place your stop loss, okay, just above a previous interesting high or low, right? Accordingly to the number of pips we are going for. With pound dollar in the 4-hour chart, we can go seeking for, I don't know, 80, 90, 100 pip charts when we have a great, good signal, okay? So my stop loss should be in line with that, not much more than 60, 70 pips, okay? I will risk a bit less of what I'm heading for, right? If my previous important resistance or support level where should I place myself is quite far away, I will try to find either filter or either avoid the trade, okay? If I don't feel comfortable with that resistance or support stuff, okay? For other crosses like Japanese Yen or so, I usually go for less number of pips, maybe 40, maybe 50. 7 to 10 is against dollar particularly, right? It really allows the mover. The pair is very, very rangy. So I don't know, many years at this point, several months we have ranges in there. So not much to watch there. I rather use it as a filter. Another thing I would like to comment before starting with something a bit more practical and answer your questions. Okay, check if you're making comments or questions. These are the pullbacks. Okay, in this particular case, I have a setting signal in the pair, right? On here maybe. It's just an example, okay? The indicators are not perfect in the practice as they are in theory. We have a pullback, strong one to the zero line, okay? And that rejection from the zero line with a V shape, okay, that takes place when the Z line comes up or goes down, in this particular case goes down, up to the zero line and hooks, let's say hooks and goes back the original previous way. This kind of pattern is very common to see, and it's a confirmation of more continuation, okay? It's a confirmation that the pair would probably extend the rally to the downside. So keep an eye on those kind of pullbacks to that zero line, okay? I guess I was thinking I had something else to say and I get lost. Anyway, I will check your questions, okay? And then we will continue. Do you always use, Nick, do you use, yes, for our charts, yes, oversold or overbought conditions. Will depend on the trading strategy, okay? When talking about commodity channel index, and I do, yes, prefer to terminate strong, probably reverses zones in the 4-hour charts, as I told you, but I can take a look also at the hourly chart, okay? 1-hour charts. John, do you always use the 14 period or sometimes the 20? As I told you, yes, chart went off. Chart went off because when I have charts and I'm checking your questions, then it becomes a bit messy. Like this, you will probably see in the questions yourself. Anyway, John, if I always use or sometimes 20, and then change the settings for different time frames. What would you use for the daily chart? Okay, for pound dollar, I always keep my commodity chart index in 14 periods. This is my daily useful chart. Okay, the 1-hour chart I use to trade, follow market or whatever. Okay, this is it. Okay, and as you can see, I have my commodity channel index in 14 periods. But when it comes to Japanese yen, you can see that I have the 17 periods. I rather like it a bit more, but that's because of my particular basket. Okay, I rather use the 17 periods. I find it more accurate. 20 seems to be too much. The indicator starts to distort, so I don't like it that much. Okay. That's for this one. And for example, for Canadian dollar, that is another cross I watch with commodity channel index. I use the 14 also, but that's because Canadian and pound tend to mirror movements, okay? Not as strongly as euro and Swiss franc, but pound and Canadian tend to mirror because the oil, okay, and because a lot of interrelationships we're not going to discuss in here. But that's why I use the same indicators in the most of the time. Okay, that's the general idea. So you don't wait until okay, Donnie. So you don't wait until candle close with it's the time frame 1 hour per hour. I use it. No, I wait in the candle closes. If you take a look at what we were looking at. The commodity channel index, you will find out that once this candle closes, okay, this one opens and then we have the next candle. I know that using static examples of what happened is not the same as following them through when they are taking place, but try to follow it a bit to see how the indicators behave when we have such a close and candle opening. Even despite not being quite accurate to trade, follow it in smaller time frames, maybe 15 minutes or 5 minutes even charts to get used, okay, to the indicator behavior, okay? That's just a suggestion. Sorry. Anyway, Jack, in 1 hour is better as a short-term momentum indicator. Well, it's if you find it accurate for your intraday trade, will be great. Okay. And which is good, momentum or commodity channel index? What a good question. Okay. I use both. As I told you, I not always use the indicators for both indicators for given signals. I told you earlier, I rather use one as the main signal provider, okay, and the other one as a filter. For pound dollar, I found out that really catching extreme oversold or over both readings, okay, with cyclic indicators such as commodity channel index or relative strength index is not as easy as it seems, okay. Pound tends to saturate again with stochastics and more trendy with relative strength index. We can see very normal readings above 80, and yes, pair will remain over both of it. So we've extended with the rally. So that's why I choose the commodity channel index as a filter of that. Okay, as a filter of that. And instead of the relative strength index with levels of 200. Sorry, that's what I want to say. So I will wait to the momentum indicator to give me an entry signal. Okay, but we are not here 24 hours a day, or at least some of us live sometimes. Okay, so what is the use of the commodity channel index to be there? Now let's say I just woke up. Okay, I just started my day, or again right now getting a buying signal coming from momentum indicator. Okay, I wake up, turn off my chart, see a good buying signal in momentum indicator, yet the hourly chart is telling me that the pair is overbought, right? So would I buy at this level despite a good momentum signal? No, probably not, because well, I would expect a pullback at least. Okay, not a strong downside corrective movement. Of course, I will base my technical strategies and much more analysis than just waking up and watching the signal, right? It's the idea is to give you an example, right? I have a good buying signal. Yes, this one is about 200. Okay, then wait for a pullback and see if the pair managed to extend the rally and momentum remains bullish. Okay, or stay aside. It's too late to buy. The indicator is telling me that. Okay, so mostly it's acting as a filter for me. Okay, it's also acting as a complement. Okay, we have here the same signal coming from momentum with this candle opening, right? Yet pair was extremely oversold. Okay, it was crossing the 200 level, right? It was crossing. So I get this signal. This is a particular great example of what I was saying. Okay, I got a buying selling signal story in here, yet we are crossing 200. We have our pullback here. Pair re-enters and price action shows back to the upside. However, it strongly turns down and the trend continues. So that's what I will wait. That's the pullback I was waiting. Okay, an approach to the 20 simple moving average that is the filter of the momentum indicator. Okay, see what's the use I give to the indicator? Maybe it's not best one. It's the one I give it to it. Okay, it's just an example of how you can use an indicator either to get into the market or to get it as a filter, right? But anyway, I believe that both indicators are good. Anyway, there are a couple of trading strategies that you can use with even shorter, smaller time frames. Give me a second to a chart. Okay. I do believe that I show you this one several times. Okay. But when we have, this is the same commodity channel index with the same 200 levels. Okay. And instead of using the 20 simple moving average, I add to momentum. Okay. We have just a 15 period liner weighted, moving average. Okay. Once the momentum is another trading strategy that pretty interesting to see with pound in search means if you like intraday or short-term trading. Okay, an indicator cross that zero line coming from lower levels or higher when we're setting not close to the 100, at least not the 100. And we have price opening a candle above the 15.1. Okay, that's a good upside movement, a signal in the 30-minute chart for pound. And this is a trading strategy that I tend to use when the market is trendy. Okay, and in this particular case, the commodity channel index is giving me the signal, and the 15 period moving average is acting as a picture. The other one is a 3 periods. One is a price follower. It's there just for visual, okay? Just to make more easy in price action carrying the moving average. It's not an important moving average to plot. Just making it a bit more visual. So I guess you understand the concept, okay? And once the indicator reached the 200 and start bending, okay, reach the 200 area. Okay, that's my time to close the trade, right? I don't care if they move higher later, right? This is a 30-minute trading strategy. It took 5 candles to do it, and it gave a maximum 85 pips. Quite interesting for 30-minute charts. Keep in mind, as I also told you, that whatever time frame you are trading, okay, whatever time frame, you should be outside that position in no more than 3 5 candles. Let's say 4 as an average, okay? So you want to provide it for that 3 to 5 candles, not much more than that. After that, technical analysis would start distorting, and signals would start changing, and you will be in trouble if you remain in unless the trend is too strong and you are following it. Usually, that's what you must follow. 3 5 candles, not much more inside the market. Okay. Anyway. Okay. Nick. Oops. Sorry. You said that seems like both momentum and commodity channel index seems to be moving in similar directions. Yes, of course. They tend to do the same. As I told you, if we have a selling signal coming from this one, that's the use I gave it. Okay. Yes, I came late to the market. We have this one in extreme oversold. We're both waiting as it moves a bit much faster than momentum. Okay, I will avoid entering the market or at least wait for a pull. That's the use I give to the indicator. Okay, I don't follow the signals in the commodity channel. It's a trading strategy. It's a trading combination like any other you can use. Okay. What is important to understand here is that the indicators are not the secret. The secret is how we read them and use them and understood their behavior. Okay, that's the idea of using indicators. Jack, can commodity use a 15 in its inside? I do believe so. I never applied a linear weighted moving average inside a indicator, but I do believe that everything's possible using MetaTrader and knowing how to program it. I don't know. I really don't do that kind of stuff. Bro, if there was a pullback, where do you think it would stop? And do you think it's the start of a new trend? Okay, good question. I like that. If we see, if we are watching, like in this particular case, 1 hour charts, and particular for pound dollar, okay, particular for this one. If we have a pullback, like in this case we were marking around here, okay, we have that such pullback, I will expect that pullback to extend to the 20 simple moving average. That will be my first level to watch. Pound is very, very accurate with the 20 simple moving average acting as dynamic support or resistance when it has slope, of course. And if you take a look, we have the 20 simple moving average at the same level as previous lows that it breaks. So I would expect the pullback to reach around 46.90. Okay, this particular candle reached 46.85. Okay, so it more or less came to the zone that should be pullback. Okay, so If you wait for the trade, okay, you will not have to wait till the pair to exactly reach that level, okay? But when you see that the pair managed to do that pullback and with next candle open indicate your bend again to the downside, well, that will be a good setting point, okay? Placing yourself above the 20 and above that 46.95 zone we have those lows, okay? That's the first half of the question, and the other half says if I think it starts a new trend, not in the 1 hour chart, okay? In the early charts, I don't consider uh, it would be a trend change. If it happens in the 4 hours, then I will be considering a bit more. If we have a real V shape somewhere, okay, in this case we don't have a nice V shape in here, so I won't consider it a trend change. In here I will, okay, but not in the 1 hour charts. In the 1 hour just for charts, those over both readings for the short term, okay, just that. But in the 4 hour charts, yes, I would consider the probability of a trend change or at least an interesting or important correction pounds in 4 hour charts when we have commodity channel in re-entering any of the 200 levels. We probably move above 100 pips. So for intraday trader, it's more than enough. Okay, it's a very, very interesting movement, but only in the 4 hours I will read it as overbought or oversold. And Boyki, what moving average is in all the charts? The 20 simple moving average. Okay, this red one is the 20 simple one. If you take a look at pound behaving with the 20, you will find that most of the time, most when the moving average has slow, pair tends to halt very close to it and pull back, okay? The same goes to the other, or in the dailies, okay? It's very strong support or resistance level for pound, okay? You will find out that when we have a strong slope, when it starts to bend over, that's not so interesting. But if you see what happened today, we had a pullback of all which levels near the 20 simple and it went back up. So that's the most important one. And in fact, this 20 simple moving average worked this good, both for pound and Australian dollar, Aussie American dollar, okay, the Aussie dollar cross. And the other one is it's a decoration in there. The 200 exponential moving average, it's supposed to tell us where the trend is and act also as dynamic support or resistance area, okay? This 200 exponential one. Of course, again, when it's so flat, it's not the most accurate one, but it's a probable target zone to prepare when you're in a bullish trend and all price is under it. Pair would probably halt around it. Of course, as any moving average supports of the system level, there's a time when price actions breaks either up or above it, right? But if you check the past history of the pair behavior, okay, you will find out that it tends to really halt around that area. Okay? Anyway, do you have any more questions or comments? This is your chance to ask questions. If not, I will tell Vicky. I hate momentum. Well, I hate my MACD, you know. I really hate MACD indicator. And I'm really forcing myself, okay, really forcing myself to prepare some material regarding MACD. I do believe it's a very interesting indicator, but I hate it. It's something personal, and it's very bad for us to recognize that we let fitting interfere with our trading, okay? But yes, it's sort of like that. As I told you at the beginning, not all indicators are accurate for all of us. We have to choose the ones that fit better with us, and most of all, understand the behavior, okay? Yes, sort of boycott, okay? Yes, Said, you can use it for 15-minute charts, but please back test it, okay? Okay. Keep in mind that this will be recorded, okay? And what's my take on dollar Japanese yen? Today, Japan anticipates probably good economic readings. Okay, for for June, they are going to say that the economy is growing or giving signs of improvement, and that's what helping the Japanese yen at this moment, rising against my rivals. But the fact is, I don't really see it breaking under 90. Okay, I really don't see it breaking so much lower. But it's personal. Okay, 97 to the most to the downside. If we regain 91, 60, 91, 50, then yes, there's a chance the pair could race back. However, it has been struggling around the daily 100 simple moving average for quite long. And that's like, it's acting like a magnet for the pair, right? We can get detached or away from that 100 simple moving average in the daily chart, currently around 90.50 or so, 91.50, sorry. So we really need to see the pair moving away from it to determine a more clear trend, okay? Anyway, I do believe that's it for today. Let's remind the girls, we are done. Okay, and as always, my pleasure to be. Thanks, Vicky. I was not sure if you were wrong. Anyway, my pleasure, always. Thank you, Boyki. Okay, my pleasure really to be here with you. Hoping to see you back pretty soon. Okay, thank you. Okay, bye for now. I do believe we have one in a very short time. Okay, hasta la vista. Yes, tonight. Yes, broad trader, always right now. Okay, see where mayors went and what happened. Okay, see you all. Bye bye.